I will be presenting today on everyone's favorite topic, insurance, right? So I am going to go through our usual spiel before we start the actual presentation, so enjoy the bear as I talk. For those of you who have not done these webinars before, in front of you on the bulk of your screen should be the PowerPoint presentation. So you should be looking at the bear at the picnic table. And at the bottom right-hand corner, you should be seeing a little video feed of me. Hello. On the left side, you'll see some icons, and there is one where you can click on questions, and you can ask questions. And if you do have questions as we go through this webinar, please feel free to just type those in. I will answer them at the end. So I'm not going to stop in the middle of the presentation, but keep entering them, and I will get to as many of them as I can at the end. Usually we can get to all of them. For those of you who need CMCA credits, you will get 1 credit for this class. It's automatically generated, and it's going to get emailed over to you within a day of when we complete the class. So if you don't have an email in your inbox by tomorrow afternoon with your credit certificate, please let us know. If you are having any difficulties as far as technology-wise, hearing me, seeing the feed, anything along that lines, so there's nothing I can do on my end. However, what you can do is you can either email education@altitude.law with your problem, or you can call Sean Sanders, who is our education coordinator, who can help you, and you can call him directly at 303-991-2076. All right. So without further ado, why don't we go ahead and get started, since we do have quite a few things to cover today. So I know that nobody likes insurance except for a select few who are weird, like me. And I also know, as you know, that as community managers or as board members, you're not really expected to be an expert in insurance, just like you're not an expert in the law. And you have professionals that you go to when you have these types of questions. So by no means am I trying to create an insurance professional out of you. But what I am doing is I just want to go through the insurance basics. And there's a lot of basics, because having a fundamental understanding of insurance is going to be really important to your ability to communicate with your boards, with your homeowners, in general terms of kind of where we're at and what we're looking at. So at least having an underlying understanding will allow you to talk about it. All right. So what is insurance? I always start with that, and we all kind of know what insurance is, but it really is a contract. There's an insurance policy. Usually they're pretty long with a lot of different pages and additions. And it's a contract between the association and the insurance company, where basically the association pays the insurance company to undertake its risk. Its risk of what? Well, it's risk for physical damage, for financial damage, for other types of damage if they occur because of a specified event or a specified peril. So in English, that basically means we're paying an insurance company to step into the shoes of the association should something go very wrong and there be damage, or or someone else suffers a damage. So damage is a pretty broad word. It doesn't just mean property damage. You could have physical damage as well. But that is essentially what an insurance policy is. So it's always important to remember that it is a contract, and you are going to be bound by the terms of the policy, which means if you want to know whether something specifically is excluded or covered, someone's going to have to look at your policy. And typically, that's going to be your insurance representative, but it can also be your legal counsel, just depending on what specifically you're looking for. So why do we have insurance? Again, we already know the answer, even if we can't quite explain it. But one reason to have insurance is because it's required by law. It's Kiowa, the Colorado Common Interest Ownership Act does require insurance for communities created post 1992. Communities created before 1992 don't technically fall under that requirement in Kiowa, but most governing documents also require associations to carry insurance. Plus, I don't think I would ever recommend either living in an association, being on the board of an association, probably even managing an association that does not have any insurance in place. Because why do we need insurance? Because we need it to protect our property. We need it to protect the association's financial assets. We need it to protect individual board members' pocketbooks and homeowners' pocketbooks. And essentially, it keeps the association from going bankrupt because sometimes the total damage amount or however much you have to pay an attorney to defend you because the association got sued, sometimes that is far more than what any association would have in its operating account or even in its reserve account. We need that protection. So we really have three basic groups of insurance. Okay, so the property policy, a liability policy, and a fidelity policy. So as you can see, under the liability policy, we have a few things that fall under that. We have the commercial general liability, we have the D&O, which stands for directors and officers, and we have an umbrella policy. I'm going to go through each one of these. So hang on just a second. Okay, so property policies. I know this is scintillating, isn't it? What's covered under a property policy? Well, just be aware that your property policy is going to cover damage to the association's property or to property the association insures. So it's going to be physical property. This doesn't involve anyone getting hurt. It doesn't involve, that type of thing. It just includes, like, if there's a fire in the community, there's a storm, a building gets damaged, your windows get knocked out, somebody stupid and runs their car right into the side of the garage door. These are catastrophic events that create damage to the association's physical property. Okay, and that is what the property policy is intended to cover. I am sure you have all at one point or another used your property policy. There's a lot of times we see fires in communities, ground movement isn't covered, but something like a wind and hail storm, there's a lot of type of events that can cause that kind of damage to your community. And so this is where the property policy kicks in. You've also seen property policy used, for example, there's a flood because of a burst pipe, right? Or a sewer backup, perhaps. All of these type of things will fall under the property policy. The association really has to insure whatever the declaration requires that it insure. So that requires a careful reading of your insurance provisions in the declaration. And sometimes the insurance requirements are located and kind of scattered throughout the declaration. So they're not all in one spot. So you think you know, but you really don't. But the declaration should be specifying what components the association insures. Anything that's actually owned by the association should really be insured by the association, because ultimately, if we own it, there's going to be an underlying responsibility. Common elements. If you manage or sit on the board of a post-Kiowa community, post-1992, you will be required, you are required by Kiowa to insure all the common elements regardless of anything your declaration might say. So if you have a condominium community and the balconies are limited common elements, but there's a provision in your covenants that says the owners shall be responsible for insuring the balconies, that's a no-no. That violates state law, and that's not effective. The association is still required to insure those balconies. Also, if you're post 1992 in your condominium community, you, the association, have to insure the actual unit. So that, would be in the drywall, the originally installed fixtures, that type of stuff. But you don't have to insure normally finished surfaces, so carpeting, paint, paneling, hardwood flooring, that type of a thing. And you don't have to insure homeowner installed upgrades. So if I am a homeowner and I'm upgrading my countertops to a granite, which isn't what was originally installed, it is now my obligation as the homeowner to insure that. But just keep in mind, just because Kiowa requires this, your declaration could require the association to insure more than this. The Kiowa sets forth the bare minimums right there, and anything that your declaration requires over and above that still has to be insured by the association. So what else is required? Yes, we already said whatever the declaration requires. So if, again, you're managing or sitting on the board of a community created after July 1, 1992, there's a few other things that are required. One is full replacement value minus the deductible. In other words, you can't insure the property for less than what it would cost to replace it. Because sometimes I have associations call me and they say, well, can we just insure this building for half of what it's worth, and then we'll just budget in our reserve account for the other half should we need it. So the answer is no. If you're a post-Kiowa community, you have to insure for the full replacement value. But of course, that doesn't count the deductible. Insurance proceeds must be used for repairs. You'd be surprised. I actually not long ago had a conversation with a community that got insurance proceeds to repair some things on the building, and they said, well, we don't really think these repairs are big. We'd rather take this money and use it for a different project that we think is more important, and can we do this? Well, the answer is no. You're post-Kiowa. You have to use the insurance proceeds for repairs, or you're in violation of state law and you're exposing, the association and the board to liability. No payment to owners unless there is a surplus. So a lot of times, and I'm sure many of you can relate, a lot of times there are situations where the association gets insurance proceeds and the homeowner says, I just want to hire my own contractor to do this. Could you just give me the money and I'll use it for the contractor and I'll pay any overages. And, if you manage a pre-92 community, that is something that we could typically draft up an agreement for, where we basically, say, here's the trade, you're responsible for all repairs, they have to be done, certain quality, and you're responsible for any damages that may come from those repairs. But if you are post-92, you can't even do that because Kiowa specifically says the money has to be used for the repairs. It cannot be turned over to the homeowners unless we've done all the repairs and we have money left over. And I honestly don't know that I've ever seen that happen. And then finally, the association policy is primary. This is really important to remember and to understand, because there are so many times where I see associations saying to their homeowners, well, we're not going to submit a claim until you've submitted a claim. The damage is to your condominium unit and you caused it, and therefore you need to submit the claim, and we're not going to. So that's the wrong answer. Because the association always has the primary policy, at least for post-1992 communities, what that means is regardless of what was damaged or how it got damaged, we have to submit the claim first. Now, we won't have to submit the claim if the damaged property is not property that the association insures, obviously, or if the reason it got damaged was something that doesn't qualify as an insurable event. Those are exceptions. Another exception would be if the total damage is less than our deductible amount, because then you still wouldn't get any insurance funds paid out. So in that case, you can get away with not submitting a claim. But what you can't do is say, well, your unit, there's about $10,000 worth of damage because you started the fire. And it's just your unit. So we're going to make you deal with this, even though the association has a $2,000 deductible. We can't do that. We have to submit our claim. And the homeowner's insurance is not going to pay anything out until they know the association has exhausted its funds. So be careful with situations where you've got boards saying, well, we're not submitting the claim because it's all the homeowner's fault, or it's all inside their unit, or it's their property, or whatever. If you're not sure, double check with either legal counsel or with your insurance professionals, because I've seen associations get in trouble for not submitting claims when they should have. As with anything, there is going to be some exclusions. There's actually a lot of exclusions when it comes to insurance policies. Now, here's a list of a few, and I'll touch on some of them, but just know, a few years ago, pre-COVID, I taught a 90-minute class, and it was just dealing with exclusions on insurance policies. So by no means is this an exhaustive list. There are many, many, many exclusions, but I'm covering the ones that I think are most important and most significant to us. So groundwater, you probably already know this, groundwater is excluded. So basically, if you, let's say we have a rainstorm, okay? So this is the example I was given by an insurance professional that I work with a lot. You have a really bad rainstorm, and the rain kind of is slanted, right? So the rain hits the window and it breaks the windows, and then it kind of hits the ground, and it runs from the ground down, to the foundation, through the foundation, and floods the basement. So the water that hits the ground and floods the basement is considered groundwater because it has hit the ground, and now it's coming from the ground into the unit to cause the damage. And so that is going to be an exclusion. However, the rain, the water that hits the glass before it hits the ground and does the damage, that's not an exclusion. That's not groundwater. So take it for what it's worth. I mean, the groundwater exclusion is anytime you have water that's coming from the ground. Demolition and debris removal. Those are, well, the demolition, debris removal, and code compliance really kind of all go hand in hand. So what this will do is, if, let's say you have a condominium building and there's a fire and it gets so damaged that basically it has to be torn down and rebuilt, because that can happen. In fact, code will usually say if it's a certain percentage of the building, you're going to have to tear it down and rebuild it. So the first thing is, you're going to have insurance kind of pay for the rebuild. But so we're going to have the contractors come and they're going to tear down what's left of the building. That's called demolition. And that is typically excluded. Don't panic, because a lot of these have endorsements you can buy that will add that protection in. So demolition is one that you can buy an endorsement for. But if you don't buy it, a typical property policy will exclude that demolition. Once the construction company has torn down what's left of the building, it's got to remove all that debris, which also is typically excluded, which means, yes, you have to buy another endorsement for that. And finally, code compliance and increased cost of construction. That is, now we're going to rebuild our building. If the building is older, there's a lot more code requirements now than there were when it was built. And so it's going to cost us more money to build it because we have to bring the building into compliance with current code. And also the increased cost of materials and labor, all that goes up. So again, as with the other items, this too is typically excluded, but you can buy an endorsement for it, which if you're dealing with an insurance representative that works with associations, you will automatically get all of this in your policy. But I think it's important to know that these are not automatically covered and you do have to pay extra to get them in there. Accounts receivables, another one. So everything burns down, people have no money, they've left, you can't find them, you can't collect the assessments, you are kind of missing your income stream. That is something that is typically excluded from the property policy, but usually you get the endorsement. And finally, foundations are going to be excluded. As far as I know, there really aren't any endorsements you can buy for the foundation. So most of the time, if there's something, you know, with a foundation that needs to get fixed, that's not going to be covered by your property policy. So again, typical exclusions, there's certainly a lot more nuances here and a lot more detail we could go into, but we just don't have the time. And I suspect you guys would fall asleep if we did. All right. Let's move on to liability. So what's the difference between a liability policy and a property policy? Well, a liability policy, first of all, it's separate from your property policy. Sometimes it's a different provider, sometimes it isn't, but it's a separate contract of your liability policy. And this is actually protecting the association and board members from accusations of wrongdoing and damages that arise from the wrongdoing. So, for example, this is really, the best example is a slip and fall in the community. So it's winter time. Somebody decides, I am going to run down the sidewalk, you know, and not pay attention. Oh, and there's an ice patch and I slipped and I fell. Of course, it's the association's fault because it didn't get rid of the ice patch, right? You've heard this before. So that is a perfect example of a liability claim because the person who fell is going to say, association, you failed to properly get rid of this ice. You did not do your due diligence. Your contractors didn't do their due diligence. Whatever you messed up, if you had done this right, the ice patch wouldn't be there. I mean, and that still is something that remains to be proved. But the allegation is that we did something wrong or failed to do something. As a result of the ice patch, I fell. I incurred a whole bunch of medical bills, and you need to pay for these. Oh, and also pain and suffering. Oh, and also I lost my job. You know, they're going to snowball it on. And so these claims have to relate to the association's ownership, existence, use, or management, which is really almost anything with how the association functions. So the key to remember with liability policies is they do revolve around accusations of wrongdoing. All right. So who is covered? Because typically a liability policy means we have a claim when either we get sued or in the case of a slip and fall, you get the demand usually from the victim's attorney and they're like, turn this over to your insurance. And the answer is yes, okay, we will. But in most cases, when you're just like arguing about, you know, hey, the water came through the roof and damaged my unit, association, you're responsible because the roof is a common element. You have to, you know, you didn't maintain it properly. That's why the water came in. You know, with those types of issues, typically insurance isn't going to kick in unless there's a lawsuit. So they're going to say it's not a claim while you're arguing about it, even if your attorneys are involved, going back and forth. The insurance won't consider it a claim until you have a lawsuit filed in that case. So kind of keep that in mind. A lot of times we'll say, hey, let your insurance provider know that we have this issue and that it may result in a claim if we can't get it resolved. But ultimately, it's not going to be a claim until there's a lawsuit filed. So who's covered? Who would the lawsuit have to name for the liability policy to cover them? So anyone really who's had any kind of official capacity on behalf of the association. So whether it's the directors, the officers, the association itself as a corporation, the managing agent committees, owners to the extent that they may be involved in some sort of decision-making process, and other association representatives. So those individuals would all or should all be covered under the liability policy. Note with directors, we do talk about current directors, past directors, future directors, because sometimes, you know, people come out of the woodworks and they file a lawsuit and they say, oh, this happened like 4 years ago, and this is the person who was on the board at the time, and they're going to name that person. So this person may not be on the board anymore, but they would still be covered if the act happened while they were a board member and they are named. So exceptions, exclusions from coverage, pretty typical at most of these, and you can obtain additional coverage for, you can get an endorsement. Discrimination, I've seen more policies starting to cover this, but a lot of them exclude discrimination claims. Yes, you can get an endorsement. If you want to know whether your policy covers it, you can certainly reach out to your insurance representative and have a conversation with them. Contract disputes, that's one you cannot typically, well, I don't think you can ever get an endorsement for this. So what is that? That is, we have a contract with the landscapers, and we, the association, don't think the landscapers did a good job, and we're going to withhold payment. We're not going to pay them. Landscaper says, pay me or I'm going to sue you. Landscaper sues the association. With these types of claims, when you're being sued by a contractor claiming some sort of a, you know, you owe money under the contract or a contract breach or something of that nature, most insurance policies will not cover that. Some of them will cover legal defense. So they'll get an attorney to represent the association, but if the association loses and the judge says you owe $10,000 to the contractor, insurance will not cover that. And the reason is because insurance is not in the business of paying out contracts that associations enter into. It's that simple. If you owe money under a contract, that's not something that the association's insurance is ever going to pay. Now, they may pay for your defense, but you would really need to talk with your insurance agent on that and see if that's covered or not, because a lot of times they won't even do that. This is important because, as you probably know, associations have a lot of contract disputes. And sometimes the boards believe wrongly that, well, it doesn't matter if the contractor sues us because we've got insurance. Well, you probably don't. Okay, so be very careful when it comes to contract disputes and making any assumptions about insurance coverage. Auto liability, that's one you can get an endorsement for. This is, for example, if I am a board member, I'm driving to a board meeting, which is at the local Starbucks, and while I'm driving there, I hit a pedestrian and hurt them. Since I'm driving as a board member for association business, the association does have a liability exposure for me hitting that person. So that would be considered, there's owned and non-owned auto liability. So this would be that type of a claim, and unless you have an endorsement that covers that, policies will not cover that without the endorsement. So most of you, I am sure, have these policies and these endorsements because they are pretty standard, that for insurance brokers that specialize in this area, they know what you guys need. Well, oh, sorry, workers' comp. So I get this question all the time. Why do we need workers' comp if we don't have any employees? And I say because Colorado is a weird state. It is a weird state. One of the reasons it's weird is because we do have laws that say if you have contractors doing work for you and the contractor is underinsured as far as workman's comp, if someone gets injured on the job, then that employee can go after the association because they were doing work on our property. And if we don't have a workers' comp policy, we're going to have to pay it out of pocket. And so because Colorado is weird, all associations that use contractors should have a workers' comp policy. Web extended liability. So that would be, we have a website, we've posted something on the website. Homeowner says, well, this is inaccurate and you're naming me, which hopefully we're not, but you know, and you have just libeled and slandered me and blah, 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 based on something we have out there on the web. And they sue us over that. So that's web liability. That's excluded from liability unless you add the endorsement. And like I said, as far as I know, HOA agents are very good about making sure you have this coverage. This last one is one that I don't think you can get an endorsement for, but it's failure to obtain adequate insurance. So what does that mean? Let's say the association, I'm going to go back to your property policy. Your building is worth $2 million. So the association gets a $2 million policy, but it says, we don't want homeowners submitting all these claims, so we're going to have a $50,000 deductible. Most claims are not going to reach the $50,000, right? So it essentially means the homeowners are going to have to be insuring their stuff, because how likely is it that we're going to have $50,000 worth of damage? At some point, someone can make the argument that by having this $50,000 deductible association, you are not adequately insuring the community, because you're supposed to insure the building, but what you're really doing is you're shifting that burden to the homeowners because you have such a high deductible. That could happen. And if that happens, you are not likely to have coverage to defend that claim, and a judge may very well agree with a homeowner in that case. So when you guys are thinking about doing really high deductibles, I would be careful about that. I'm never comfortable with any association really that goes over $10,000. But I know a lot of associations do $20,000 and $25,000. I certainly would never, ever recommend going over that as a deductible. All right. D&O, directors and officers. So this is very similar. It's protection for claims that allege the board, the directors, the officers have committed some sort of a negligent or wrongful act or omission, and they specifically name those individuals. And so basically the same people that we talked about before that were protected under liability are still the ones who are protected. It's sometimes we see the D&O carrier fighting with the general liability carrier because they're each pointing fingers at each other and they're saying, no, this is a general liability. No, this is directors and officers. Ultimately, we don't care as long as somebody covers the association. So sometimes it's hard to tell the difference in a claim, whether it should go to liability or D&O. But like I said, that is an issue, I think, for the insurance companies to fight over. It should not be the association's issue. Umbrella. So the umbrella policy comes in if the association has exhausted its general liability policy. Okay, so let's say we have a $2 million liability policy. There's a slip and fall in the community. Victim sues association, goes to a jury. The jury hates the association, very sympathetic to the victim, and says, we award the victim $5 million. So this actually did happen many, many, many moons ago. This happened. The association has a $2 million liability policy. So once you get, to $2 million, we have another 3 outstanding. And ideally, you have an umbrella policy that comes in and pays the additional $3 million. In this particular case, the association did not have an umbrella policy, and it was not a good situation. Luckily for that association, they were able to work out something with the plaintiff, who seemed to be more understanding than most on this. But if the plaintiff wasn't being reasonable, then I don't know how they would have paid, because they just didn't have the money and they did not have an umbrella policy. So how much should you get in your umbrella? I usually see 5 to 10 million, and I would recommend no less than 5 for sure, because you just never know. Fidelity. This has nothing to do with cheating on your significant other, okay? Let me just put it there. This is theft, essentially. So it's loss of funds that result, as it says, from dishonest acts of the association, its employees, directors, officers, agents, basically anyone in the association structure that has access to money, or maybe doesn't have access, but somehow still is a representative of the association who could find a way to get access to the money. Be careful. I have seen associations that had insurance brokers that were not HOA specialists. They got a fidelity policy, but it was a true fidelity policy, which from corporations, a fidelity policy is theft by your employees, and that's it. So that's what those associations had. And then somebody actually embezzled money. And when they submitted a claim to their fidelity policy, it was denied because they were not employees. So this is another reason why you want to make sure that when you are dealing with an insurance broker for your HOAs, that they are HOA insurance brokers. There's only a handful of them. A lot of people say they are, but there's only a handful of them here that really know what they're doing. So make sure whoever you're dealing with that they do know what they're doing. So in our case, fidelity would include loss of funds from not employee, or not just employees, but anyone. So, and that includes, by forgery, or any other type of theft. So how much do we insure, right? How much money should the fidelity policy insure? So if you're a post-Kiowa community, so again, post-1992, we have a minimum in the statute that says it's an aggregate of 2 months of current assessments and everything in reserves, but it has to be calculated from the current budget. So whatever the current budget shows, because you keep adding to reserves as the year goes on, but you're just going off what that budget shows. So that's the minimum. You can definitely have more than that, but that is where you start. If any of you are sitting here thinking, isn't it 3 months? You may be thinking back to a few years ago when that was a requirement with respect to manager licensing and things like that, but it's not an issue at this point. But it is under Kiowa, it is 2 months and everything in reserves as calculated from the current budget. Okay, let's talk about a few other things that are required. So this is, again, post-1992 communities, because if you're pre-1992, the only thing that's really legally required is what your declaration requires. Now, keep in mind, your declaration may not require much, but that doesn't mean you shouldn't have much, because everything we're talking about here, all these policies, are at least at a minimum recommended, highly, highly recommended. Even if they're not required. So you should never be in a position where there's a community without a property policy, unless it truly doesn't have any property, or community without a D&O policy. If you have a board, you should have a D&O policy, right? Make sure everyone's protected. So a few things here. The insurer waives the right to subrogation. Let me translate that to English. You have the homeowner that's not paying attention, leaves their cigarette out, causes a fire, and now there's like several units that have fire damage, and so insurance is coming in and making those repairs. What the insurer cannot do is then say, well, this homeowner was negligent, so we're going to try and recoup all our money from that homeowner. Because the theory, at least, is that homeowner isn't insured under our policy. The homeowners pay, right? They pay for the policy. They share in the policy. And therefore, they are all considered the insureds under the policy. So think of it in terms of your car insurance policy. If you're driving and texting, which I hope none of you do, right? And you rear end the guy in front of you, your insurance is going to pay for their damage, and they're going to pay for your car damage. But they're not going to come back and say, well, you caused the accident, Dodo, so you need to pay us back, right? Because you're the insured. So it's exactly the same type of analysis with respect to homeowners and the associations or the homeowners insurance being able to go back after them. We kind of don't do it justice because we call it the association's policy, but it really is intended to protect the homeowners. So you need to think of it as really their policy versus our policy. No act or omission by an owner will void the policy. So if you have a stupid owner who's doing things, and it's caused the fire, the insurance company can't void the policy because of it. Now, at some point, they may cancel you and say, we're not insuring you anymore, but they can't just but they can't void the policy because of an actions of a homeowner. Property losses must be adjusted with the association. So essentially that means the association has to be the one submitting the claim. The association is the one receiving the insurance proceeds. And we talked about this a little bit earlier. The association is the one that's going to get the contractors to make the repairs, and we're not giving the homeowners the money. We are paying the contractors. So the adjustment process is through the association. And finally, the association can adopt written non-discriminatory policies. I don't know why they use the word non-discriminatory. I mean, I would think everything has to be non-discriminatory, but they only use it in this particular phrase. But the association has the right to adopt a policy that governs how claims are submitted to insurance, how deductibles are going to be allocated, and Kiowa further provides authority, even if you don't have a policy, to have the deductible portion of the claim to be assigned or assessed to an owner if an owner's negligence or willful action or whatever caused the damage. So in the case where we have the person who left their cigarette out and caused the fire, if we have a $10,000 deductible, that $10,000 may be assigned to that individual if the board determines they were negligent. Okay, but I will recommend to all of you, if you have a post-Kiowa community that does not have a deductible policy, please, please, please make sure you adopt one as soon as possible. The reason being, Kiowa has some weird language in it, which implies that unless you have a deductible policy saying something different, the association bears the deductibles for any claims it submits. It doesn't come out and say that exactly, but it highly, highly implies that. And I don't want anyone to ever be in a situation where a homeowner says, no, you don't have a deductible policy, therefore you have to pay the full deductible. So please make sure you have those policies. You should have them for your pre-Kiowa communities as well, but for sure for the post-Kiowa communities, because again, that language could be used against your community if there's a claim filed. All right, now how do we know we are protected? I'm trying to get done a little earlier today because I see there's a slew of questions. So, I'm trying to leave enough time for us to get through this. So how do we know we are protected? We are protected because A, you're obviously going to talk with your insurance professional who specializes in HOA coverage. That is kind of your expert. That is the person who's going to, make sure you guys have what you need. You can do an insurance audit. So that is a legal process, though. That is something that, most law firms will do for you. In our world, at Altitude, we have two kinds of insurance audits. We have a full one or a basic one. But basically, what an insurance audit is we look at your governing documents. We see what is required to be insured pursuant to your documents and whether anything is required to be insured pursuant to Kiowa. And we created this matrix where we'll kind of list all the various items. We'll list, physical components. We'll list, and then we'll talk about liability issues, and we'll list that here's what's required, and then we'll let you know, yes, you have coverage for this. No, you don't, because we're going to review the entire insurance policy. And so we'll tell you whether or not you are missing insurance that's required, or whether we see or don't see certain endorsements that you probably need, or whether there's some sort of exception that you need to be aware of that maybe you want to get an endorsement for. So basically all of that gets laid out in this audit. And so that is a tool associations can use. And then of course, maintenance and insurance charts, most law firms prepare those as well. And that is essentially a table that should show you all the various components, physical components in the community. And then it's going to tell you who has to maintain it and who has to insure it, which is not always the same person, right? Sometimes the association insures, but the homeowners maintain. And that tends to cause a lot of confusion for people because it's hard to decipher what's insurance versus what's maintenance. And so the best thing I can tell you to do is to think of maintenance as kind of wear and tear. Okay, it's the wear and tear, that stuff that's not going to be insurable, so it's just old or it hasn't been maintained in a while, hasn't been given the love, that it needs. And so now there's damage. That's maintenance. And insurance is more of the catastrophic event. Something big has to happen for insurance to kick in. So that's really think about those two things in your head when you're trying to decipher between maintenance versus insurance. So actually, I have 14 minutes. I'm going to let you look at this. So happy and funny. Yes, I am slightly sadistic here, but I will let you look at this funny slide before we go to questions. And all right, I'm going to start at the top here. Okay. So what happens when they fall and hurt themselves and they report it to the HOA? So you file a claim, but the owner doesn't submit anything or any request for reimbursement. How does that play out and affect your insurance? So if you just have a slip and fall, I don't know that you want to submit a claim right yet. You may want to let your insurance agent know, hey, we had a slip and fall, haven't received any demands yet. Do we need to submit anything, or should we hold off? I would defer to your insurance professional on that one, because sometimes they'll say, don't submit anything unless you get a demand from their attorney. And typically, it's very clear when you get a demand from the attorney. They basically tell you, you're the association, here's my client, they suffered a slip and fall, they incurred damages, and they'll say, submit this to your insurance. So most of the time that's your cue to submit, but I would always recommend you reach out to your insurance person and ask them whether they think you should submit anything or hold off until you know that someone's asking for something. Is the association required to carry insurance on the exterior of the building, roof, and exterior walls in a townhome association? So under Kiowa, the answer is going to be no, they're not, because with a townhome, it's the homeowners actually own the structure. They own the land on which the structure sits, and they own that, their portion of the structure. And so it's not ever going to be a common element if it's a true townhome. So Kiowa would not require us to insure it, which is why you need to look in the declaration, because I would guess 9 out of 10 declarations do require associations to insure the townhomes, because they're all connected, and that way the association can ensure there's adequate insurance for all the townhomes should there be a catastrophe. But yes, you would need to look at the association's documents for that one. It is my understanding that the insurance company uses their lawyer and that our attorney is never involved. Is there a way to use our HOA attorney? Is that wise? So it's not always the case. And this really is referring to the liability policies. So this is when the association gets sued and you submit a claim to your carrier. They're going to assign, each carrier has a group of attorneys it works with. The reason being is, I don't know if you guys know this, but in order to be like a preferred provider or attorney for an insurance company, you basically agree to get paid half the rate of what you normally would get paid if it wasn't an insurance issue. And so, you know, our firm, for example, we do quite a bit of insurance defense. It depends on the insurer. Like there's some insurance companies, like I think State Farm, for example, I don't think they would ever have us do any kind of a defense for them. But there's others that we work with on a continuing basis where, for example, they will have us, if especially if the board asks, they will have us do it. But I would guess maybe 80% of the times you're going to see the defense being not your HOA counsel, probably. So you can always ask for it, doesn't mean you'll get it, but if you don't ask, you definitely won't get it, right? Does the association need a formal deductible policy before they can expect a homeowner to pay this portion of the claim? If you're talking about the deductible, I think if you're a pre-Kiowa community, you might have an argument to say, you know, if it's your maintenance obligation and the deductible falls under the maintenance because it's stuff that's not covered by insurance and you need to pay. I know we've done that before. If you're a post-Kiowa community, you know, you have a harder time with that argument, like I said, because there's some verbiage in Kiowa that seems to imply the opposite. So my recommendation would be to have the policy no matter what, and at least then you know you're safe. You've got the policy. Also, I know there are several insurance brokers, HOA insurance brokers, that are recommending these now because the homeowners' individual policies, those carriers are getting more and more aggressive going after associations and demanding that the associations pay for a portion of the deductible. And then they're successful with associations that don't have those policies. So I know there's a lot of brokers right now saying get those policies in place now so that you aren't stuck battling it out with the homeowners insurance. HOA insurance brokers. I missed that. Did you say agents need to be HOA certified insurance brokers, or is it recommended? What certification? No, I don't think there's a certification to be an HOA specialist. I'm just saying there is a handful of insurance brokers that specialize specifically in the HOA world. Kind of like HOAs are nonprofit corporations, and you can find a corporate attorney, but a corporate attorney doesn't specialize in an HOA. So they may know the basics, but they're not going to know the nuances that apply to the HOA. Same thing with insurance. I mean, a regular like insurance professional, they're going to know what companies and corporations need and things like that, but they're not going to know the nuances of an HOA. And so, which is why I always recommend an HOA professional. They're not certified. So it's really, if you're not sure, you can ask by word of mouth. You can talk to CAI. I mean, you can ask your attorneys. There's a handful of them and we know who they are, basically. Instead of acquiring an umbrella policy, why not just increase the liability policy coverage? That's a great question. And that's the problem, I believe, is, and you can check with your insurance person, but that a regular liability policy, you're not going to be able to get it up to $5 or $10 million, and because they're not going to offer that. And kind of like if you go over and above the 2 million, it gets exponentially more expensive, as opposed to an umbrella policy is a lot more reasonably priced. Now, again, double check with your insurance agent, but that's been my understanding, is that you just can't, they will offer a regular liability policy for $10 million. And if they do, that it's very, very expensive. But let me know. I'm curious if you do find anything out about that. Shoot me an email and let me know. Will the PowerPoint be available? Yes, it was sent out this morning. How do we know if someone specializes in HOA insurance? Like I said, you can check with CAI. You can check with your legal counsel, because HOA legal counsel, we know who those insurance brokers are. So we know, if I've never heard of someone and they're telling you they're an HOA specializing insurance broker, I'm going to be like, probably not, because I've never heard of this person. And, you know, it's a small world when it comes to these types of professionals. So that would be my recommendation, is talk to someone, either your attorneys, maybe your community manager would know. Management companies typically also have, you know, attorneys that they, not attorneys, the insurance brokers they work with that they know specialize in that. So there's lots of avenues to find those individuals. That is, oh my goodness, that is all the questions. I can't believe I got through all of them. Any final questions before I let you guys go and enjoy the rest of your day? Well, okay then. So, what's that? Yes. Sorry, I'm not sure if that was a yes for yes, I have another question, or yes. Okay. Well, I don't see any other questions. So I hope you guys have a wonderful day. You feel free to email me at this email address if you have additional questions that I didn't answer. I am always happy to do that. Thanks, everybody, and we'll see you next time.